Let's try our hand at some kind of introduction before something I could clip off before we get started. So, welcome to Off the Crypto Cruff. Now, where pretty much any topic, as long as it's YouTube is safe, is on the books. Your hosts, Jeffrey and Jesse.
Howdy.
Just talking the shit, and pretty much what we go through. Last week. Oh, it's been a ride so far this month.
Yeah, it's highs and lows, man. It's we're approaching the closer we get. I just feel like things are going to get crazier, and then I don't know. We'll see. I got an email from. Did you read that Coinbase email or Coinbase Bytes email about what's up? It's Coinbase Bytes, and it says there's never a dull moment on the blockchain. Here's what you need to know this week. It talks about the Bitcoin hovering near 70,000 as the halving approaches. Market watchers are divided on what's next for crypto markets post halving.
I haven't seen that one. The auto trash and spam is hit or miss on those.
Yeah, but I mean it's true. We're totally seeing that. It's the whole.
One thing I did see an article in the last week. Now basically does tell me the bull market started. Is what caused this crash was liquidations.
Yeah.
So people are betting long, and all it takes is a tiny dip and that first domino, and then all of a sudden you have the mass sell-offs. Even the people that think they have a safe position, they lose out because they're making bets, and it doesn't work out, and it just makes some of us just cry a little.
Well, I feel like we're kind of a little more better for the wear now that we kind of understand the market better. Where before we've been freaking out probably, when we first got in this, and oh my gosh, things are going crazy. Thinking, oh man, we're making all this money, and then we're like, let's ride it, and then it then it takes a dive and we freak out and start selling. And I think it takes a little bit of it's just basically it's taking our experience and seeing it, almost predicting it to the point,
or at least anticipating it a little bit. And then when the news comes, you're like, oh yeah, that makes sense.
Yeah.
It's like, because now it's just like the buying opportunity, it's just trying to CoinSkid is just like, he has the perfect phrase for this. You buy green candles, you get big red dildos. But when those dildos come, that's the buying opportunity.
Right. it's going against your gut is what it is.
No, completely against it.
Yeah, if it doesn't feel right, you're probably doing the right thing when it comes to the market. I mean, that's in general. I think in almost any market investing, is even stock market. It's just if it doesn't feel right, it's probably the best time to buy.
Yeah. And that's where a lot of things are kind of unfortunate at the moment, because a lot of the news that I've actually been seeing from some of my other channels, it's kind of unrelated, because this was a question that I brought up to you, is the CPI came in hot. It's higher than normal. And as far as I'm concerned, the way inflation is measured, it's only done year on year. So their goal is 2% a year is the goal, which means that the dollar is still inflating 2% every single year. Well, it came in at 3.5%, but that means that the goal never is to get back to pre-pandemic spending levels, which people probably need.
Yeah.
Right. And that's going to be one of the biggest differences, all else, everything else being equal, it's a worldwide market, but inflation's being felt everywhere, between the shutdowns and everything, trying to get manufacturing back up and running, getting people back to work. It's still a hot mess, so it's just like really trying to think through how all this is going to end up still affecting, the market as there's more pressure, because things are going to get weird. Because, as the halving approaches, Bitcoin is literally programmatically going to cut the income to the miners in half.
Yeah.
So that's what puts the pressure for the price to rise. But because of other market forces, outside of your BlackRocks, your Elon Musks, your Jeff Bezos, right? It's like, where is that buying pressure going to come from? Because traditionally, it did come from the retail market.
Yeah.
And retail's being pinched.
Yeah. Yeah.
You
That's true. Yeah. And you may see a little bit different with retail just because of people don't have the money to spend. Last time people had money to spend, there was a lot of stimulus happening.
It's stimulus. You get the keyword. I was about to say there was a lot of free money.
A lot of free money out there. People were investing. Yeah. Some of the smart people were investing. Some people, the not so smart people were investing too. So because it just sounded good. But
a lot of those, some of those not so smart people were buying stuff that are now worthless, and
right.
It's part of the stories that hearing is it's like one family was making a decision between paying their mortgage versus putting food on their table for their family.
Yeah. I mean that sounds like depression.
It's getting there and quickly.
That's crazy. I mean, you already had people before, retirees having to make a choice between their medication and food. That was happening.
Do I just die from the disease, or do I die from starvation?
Yeah, yeah. I don't know if it's that extreme, but they were basically like having to like
if it's diabetes, heart medicine, stuff like that. I mean, there's benign stuff, but
things that you can kind of like skip every other day and be okay, but yeah, it was. You don't hear much about that now. You kind of wonder how that's happening now, because I mean the medical field is insane too. The insurance, I don't know. It's just kind of it's frustrating because when you go to I go to the doctors and I still got to pay, couple $100 for, and I'm like, why have insurance? It's like, so it's not only that is going up and making it harder to be able to take care of yourself, but then, go to the supermarket and try to buy food. You're not walking out of there with as much as you were a couple years ago.
I feel you with the insurance, and even though that we do put in a lot, I can actually say I'm glad we have it, because I saw the end of the year statement of what insurance actually ended up paying, even though that we have a high deductible plan. And it would have been unaffordable without it.
Oh yeah, I mean, but also that's kind of the catch too with that a little bit. You go to the doctors and it seems like they charge people more that have, if I've heard them talking, like when I'm sitting there, mainly the dentist. This is mostly the dentist lately because I've been to the dentist a lot, but I'm hearing them talk to other people and they're saying, oh, let us know if you're not on, you have insurance, dental insurance, because we can work out, a better price. So it's kind of like, I don't know. I feel like they're kind of charging more for for like if you have insurance.
You raise a really good point, because the thing is that there are paper pushers in doctors' offices and dentist offices, and all they do is file paperwork for insurance. And you're a business owner, which means that that is just pure overhead.
Yeah. Oh yeah.
So if those people are not filing paperwork, that means that they don't need to be paid, right? So you could lower prices without insurance. You could make medical cheaper without having to file that paperwork.
I never even thought of that. That's a valid point. Yeah. Okay. I never even thought of that, actually. I mean, but there's still people, they still gotta, I don't know. I guess, they're not having to deal with all the insurance stuff. Yeah, that's true. Because it is a nightmare too, on top of it. Yeah.
That's whether or not they'll actually cover, there's a lot of things that kind of go into that, so there's risk as well on the doctor's side. So if you took actually the insurance away from the doctor's side, then they don't have to worry about the risk of it. They could just actually have fixed point pricing and be like, for me to do this procedure or to do this test, it costs me this much.
Yeah.
And then I maybe need one or two techs You know, if they're full service and they have their own lab, then they're paying lab techs, and then they can really control their costs that way. But by adding in the insurance, there's the risk of the insurance, whether or not they'll pay. Plus, there's paying the people that actually have to file the paperwork, calling the insurance companies, seeing where where the reimbursements are coming in. You know, it's just pure overhead.
Yeah, no, that makes sense. That's a good point.
Oh, there was I read about that a long time ago. I forgot where I read about it, but it's turned into a scam.
Yeah.
Well, a government, it's not, I wouldn't say it's scam, but it's something that government mandates. And it's just completely insane the way it just completely works. It's just like you should have the labor of medical care and the people providing the care setting their prices competitively within a market. Once you have, there was something I read that explained it this way, and really think about it, is what if you actually had car buyer insurance, right? Because insurance is the only time instance where we actually have a third party payer. That I think that's what it is. It's either second party or third party. But in other words, you're giving money to somebody to negotiate on your behalf. So imagine having a company where you would pay them and they would negotiate your car price for you.
Okay.
Right? So you don't go to the dealership, you don't negotiate. Now you have this other person that really doesn't care about you or the dealer.
Right. Well, that's the broker. We deal with brokers, like the insurance company. As far as our insurance, we deal with the brokers.
Right.
They should be negotiating a rate, but it seems like they don't. It seems like they're just like, basically setting you up to spend money is all they're doing. I don't even understand it. It's like, I thought as a broker is supposed to like negotiate for you, but I don't think they do. I think they're just like, yep, these are the prices. Sure. This is what we got.
Yeah. Well, in this instance, a broker is basically just a mediator. It's like, okay, I deal with X, Y, and Z company. These are the rates. This is the best rate I can get you from this company over here. And that's all they're doing.
Yeah. It's like, can we get rid of the brokers and just directly,
But yeah, I mean, that's a similar thing, but that's what insurance is doing. But it's doing it with the doctors because they're brokering between doctors, but it's basically fixed price from the insurance company because it's the insurance company that's setting the price.
Yeah.
And at what point in history has price controls ever worked, whether they're government mandated or through a third party?
Yeah. Man. It's insane.
Yeah. Crypto to insurance. It's like
exactly.
An awesome
segue over to this.
As I said, off the cuff. It's like on anything goes, any topic.
Yeah. No, I like it. So.
But yeah, it's just like the news has definitely been a kind of interesting, hit or miss, and kind of like all over the place.
Yeah, I haven't honestly, I haven't watched the news in a while. I haven't really read the news, so I'm a little out of current. But I don't. The only thing I've been doing is kind of getting the emails here and there and checking how things are going. I can just see things have been going down as far as the crypto market. But
well, count yourself lucky that you don't watch it nearly daily. But
no, I'm in long-term stuff. I'm not long-term stuff, but I'm just waiting it out. I'm trying to see what's going to happen.
I've got a decent bag. It's like there's some other channels I listen to, and Kevin Cage definitely has a good plan. It's like the thing he breaks it down to for me to simplify it, just for myself, for my sake, it's kind of like a 70-30 plan. It's like if it just happens to moon, there's 70% that I could just go ahead and sell to take profit, and I can actually live comfortably today. And there's that 30%. That's the hold for life. In other words, that is the generational wealth. Don't sell, And I think that's a decent idea.
Yeah, that's solid. Yeah, I like that. And that's probably where I'm at too. I don't need it now. I mean, it'd be nice. Sure, I would love to not have to work. Like, I'm really enjoying working from home right now. Like, it's kind of nice, but the you know, but at the same time, it's like, you know, I'll take that, like you said, that 70% if it kind of does something nice for a little bit, pull something out. But yeah, long term wealth is what I'm looking for.
Yeah.
That's
And again, for the audience, and I forgot to mention this in the intro, not financial advice. Anything you hear.
Oh yeah, 100%.
This is just two friends talking the shit and having a good time and letting us share it with everybody else. That's all this is.
Yeah. No sponsors.
Oh, that is very true.
So no ads right now.
Yeah. One of the things I want to add to the channel, to the description, is I do actually have a wallet set up for this channel for donations. So maybe this posting I'm going to add to the description. Wallet addresses people can donate to directly if they like our content.
Yeah. No, it's good. People do it all the time, you know.
Mm-hmm.
You know, they have the whole thing, the Patreon where you
there's Patreon, there's locals, the other platforms that we're not on. So again, YouTube and Rumble are our only two platforms. So if anybody reaches out to you trying to possess us from anywhere else, it's not us.
Yeah.
Again, we don't do advice. We're not going to try to get to you any other way. If you want to donate, the only way to do it is going to be in the description, period.
Yep. No,
Got to put those caveats in there.
Yeah. And no, what's the everybody tries to get you in the comments too, and like, oh yeah, here you go, hit me up here. Yeah.
So here's something, and this is world news. So we were both military, so I would actually like your thought on this. So part of what's actually striking some fear right now before the halving is there was a strike apparently by Iran against Israel.
Yeah, I did see a snippet of that. Yeah.
And the increased heightening of war is introducing more fear into the market. You know, so do you have any thoughts on that?
As far as why you think people aren't going to invest in the market because of that? What's happening? No, because I don't know. I mean, in our business, we generally know like when time of war, it helps us because we have more money. The government starts cutting lots of checks, and we generally have a lot more money. That was actually kind of a topic recently. Some of us were talking about was we almost need a war to make so that, because it just seemed like the government's really been tightening down on budgets and stuff like that within our realm. Mm-hmm. And people were saying we really need a war to, like, you know, it's not something we want. Of course, we're not like asking for a war, but it's, you know, but it definitely increases the money thrown into the environment, I guess you could say.
What is it? The military industrial complex.
Yeah.
You know, so there's a lot of money coming from government into military contractors and then feeding downwards.
Yes. Yeah. It's just they tend to be able to cut a lot more money out that way when there's a time of war, and you know, even if we're not in war, we're supporting the war in some way. You know, and obviously we're over this one, so it's I don't know. Yeah, I don't know if it would actually hurt this market or not. If anything, I mean, at one point, a lot of people in those countries were moving money out of their cash into crypto because crypto has the ability to.
It's more portable.
Yeah, it's sustainable. Whereas their money but you know, during wartime, their money may not be worth anything if they.
That's a fair point. I mean, one of the things that actually brought into from World War I to World War II was Weimar Germany and the collapse of their currency, because they hyperinflated because, you know, because of World War I, they had to pay all of basically these Europeans countries, you know, reparations. And they inflated their currency to the point to where it actually destroyed their local economy. So I mean, so very similar things can end up happening even today. You know, it's like
Yeah.
as people say, it's like history rhymes. It doesn't quite repeat, but it does rhyme.
Yeah. Yeah. We you know, I spent a little time in Iraq when all that went down, and I just remember the some of the kids, like when we'd stop when we were in certain places, some of the kids, you know, would come by and try to trade us like dollar bills for like their money. You know, it was like I still have some of it somewhere. Like, you know, money with Saddam Hussein's picture on it. This was
Wow, that had to go worthless.
yeah, it was worthless. Like at that point, because they're, you know, the country has crashed. You know, it's like
Mhm.
the economy's gone. It's so their money was not worth nothing. So they were trying to get like they were like giving us like $50, $100, you know, whatever they were at the time for like $1. Just wanted $1, or like, you know, and of course, you know, I had some cash, so I would trade them just because to me it was kind of like something to collect. But it's kind of the same thing, you know. That's these countries are going through this right now. It could be that their money is worth nothing if depending on how things go. So you know, I think what was it? There was, I think when all this started back, there was a lot of people moving money. Oh no, it was when they were moving when Russia invaded. Shoot, I can't think of it.
Ukraine.
Ukraine. Yeah, gosh, that's terrible. Uh,
We're showing our age. Don't worry
yeah,
about
yeah.
it.
When Russia invaded Ukraine, you know, they were a lot of people were moving their money that into crypto at that point. And I remember the market kind of peaked a little bit. You know, had a little uptick.
And even crypto kind of shows that it's really hard to enforce. Uh, uh, Man, I'm brain farting myself.
Yeah.
Sanctions. There we go.
Sanctions. Yeah.
Yep. Enforce sanctions because a lot of the oligarchs moved into crypto just because how easily it is to move money around with using it.
Yeah. And you know, and all they gotta do is have it on their wallet, you know,
Mhm.
wallet, and you know, at least at that point they're like they have their money. If it's in the
Mhm.
bank system, they don't have it. You
I
know?
mean that is true. Actually, talking about banks and all this kind of lends into something else. Is apparently Swift is trying to. Do you know what Swift is?
Yeah. Mhm.
Swift is trying to effectively turn into the World Bank. They're
Really?
trying to turn into the Bank of Banks because they're integrating effectively a CBDC for all banks because they interconnect the banks, right?
Yeah.
So Crypto Casey was actually talking about this. So
Mhm.
basically, it'll make it even harder to actually get out of the traditional banking system because now Swift becomes the bank of banks.
Okay. Yeah. I mean, we'll see.
I will definitely we'll see how things play out. It's just
Yeah.
like, we've had some minor discussions offline. Well, I don't know if it actually made the little trailer cut that we actually have for the first episode
Yeah.
or episode 0, but yeah, I mean things are definitely interesting. And what the reason why I was looking away was because I wanted to take a look at this. Is even though the crypto market is down, and it's like all is fair, across the markets, right? And two of the markets that I do watch on TradingView is silver is currently up. It's green. It's actually at the top of a candle right now. It hasn't hit the 50% Fibonacci. I can't explain what Fibonacci's are. I'm not that good, but there are a lot of channels that can actually explain it if you're kind of curious. But it's something to kind of watch. And gold is still technically well into price discovery range. It's at the 161, according to the way I'm charting it. So that means that gold and silver are up. Overall, though, when you actually take a look at gold and silver versus Bitcoin, they're still virtually flat against inflation. When you're looking at world war inflation, they're still not, over the last 10 years, anywhere near close to Bitcoin,
All right.
which I still find intriguing.
That is
But
interesting.
they are currently pumping in
Yeah.
the current market. So that kind of says a little something about where CPI is, though. I think.
CPI. What is
Yes.
CPI?
The Consumer Price Index.
Okay. Okay. Yeah, it's interesting. I actually made old fashioned of this myself, but I might go a little bit more.
Yep. Oh, and for the audience and y'all's edification, basically, should last one drink.
Yep. That's why I said a little more. You got a little bit left there. I might have been a little less pour.
I kind of pre-flighted before I started.
Oh, okay. I did not.
Yeah, so I'm already second one in.
Gotcha. Okay.
But yeah, so
Yeah.
help loosen the lips a little bit.
Yeah.
But I definitely think that is kind of interesting to note about where gold and silver are, in relation, because they are typically, they are the traditional inflation protection or hedges.
Yeah. So what you're saying is Bitcoin has gone up higher over a period of time than gold and silver. They seem to be more flat than Bitcoin, is what you're saying.
Yeah. There's a lot of analysts that actually kind of agree to that. Depending on who you listen to, there's people that there's people that actually don't understand Bitcoin. Bitcoin is the mother of all crypto. So I'm not really into Bitcoin. I missed the boat on that. I just want to readily admit that
One of them, sorry.
it's just like, I really wish that when people told me about it 10 years ago, I got into it. I would not be working today if I got into it when people was telling me about it. But then again, I still might be, because the reality is just that when you're making a little bit of money, because when I heard about it first, it was $1. It was less.
Yeah.
Once it hit $60, come on now. Who would not cash out? And then I really have regrets at 60.
Yeah. I have, my friend, he's,
well, there are the diamond hands people that,
but what the crazy part is with him is it wasn't even about that for him. And because when it went up to I think when it hit 6,000 or it was, about 10 years ago, or I don't know, was it how much? We're in a 5-year cycle. So it was that first time it really just went up. I think it was $6,000, and we're all like, "Man, you got to sell it! You got to sell it!" He's like, I don't know. I don't know what to do. He's like, I don't know. He's like, but I'm not really into it for the money. He's like, he's more about. He was more into it for what it was about, So he was just into it for a much different reason, which benefited him in the long run because he just held on to it, and he actually bought more. Because after that year it went way up, it went way back down, of course, and then he bought more, and now he's sitting pretty because he sold out when it hit about 5 last time. Just still has some. That's what the crazy. I didn't realize he still has some. It was so he's cashed out.
I want to make one point on this because I'm looking at the chart and trading view.
Yeah.
I don't want to bring on the website this time because last time my wife couldn't read it, so that's why I'm looking off to the side so I can actually take a look at stuff as you're talking.
Yeah,
but I am looking at the chart. So this peak was in 2017. It went before the peak. It was less than $1,000. It was $700. So it went from $700 to $19,000.
Okay, so it was a lot more than I thought it was. Yeah. Okay.
Yeah, and then it crashed back to 3,000, and then it basically went into this accumulation that fluctuated as high as 11 and went down as low as 5,200.
Right.
So there's your 6, and then you come over to the new bull run. where it peaked effectively around 60. So yeah, I was just like, just insane growth just over a decade. I mean, this is a nascent, what is the word? Commodity, investment class. It's just a class of things that is allowing normal people to make real wealth as long as you're being patient and doing your own research. And I can't emphasize that second one the most. Nobody can tell you what to do with your money. Nobody. Ultimately, it boils down to your own decision.
Yeah.
But it's just like, yeah, as your friend, is this like, that's just insane. And that's kind of like the point is that even though that gold and silver are going green, long term, I ultimately don't. They are highly manipulated. One, and two, even if the price, let's say like the price of gold actually does spike, out of theory, it does finally decide to actually make a big move, and it proves the gold maximalists. And you'll always hear this term. There's maximalists in pretty much everything. There's gold maximalists. There's XRP maximalists. There's Algorand maximalists. There's Bitcoin maximalists. I mean, it's like there's people that be like, this is what I'm focused on. That's it. If gold actually finally moves into a big way, there are a lot of private companies right now that are working on space exploration, putting rockets into space.
Yeah.
There's an asteroid that's within shooting distance of Earth that has more gold on it than all the gold on this planet.
Wait, what?
Yes.
Okay.
I mean, it's literally trillions of dollars worth of gold.
It sounds like a movie.
It does.
Yeah.
But,
there was a movie. There was literally a movie. I don't remember what movie it was, but they were like, there was some rare like mineral on the asteroid, and this company wanted that mineral, and that was the plan all along. And they were trying to claim they were saving the Earth and everything. It was, and then it failed. Their mission failed. It's like a whole movie. I'm for real.
Yeah.
Like the whole thing.
No, I understand. It sounds like
hilarious. You're telling this right now.
But I mean, but you think about it, is that everything's about price incentives and price motives.
Yeah.
Is once a commodity become because the thing is like, think about oil. Oil, every time they're always saying it's like it's really scarce and we're running out. I was like, I remember in elementary school back in the 80s, they were like, we're going to run out of oil. Price goes up. Oh, we discovered more oil. No, they already knew about it. It was just too expensive to get to. The price went up to a point to where the risk and the price per barrel you can get out became worthwhile. So it's not necessarily that these are scarce materials. It's once the price becomes to the point to where there's incentive, profit motive to go and get it. That's all for gold. But once you tap that asteroid,
what a twist on profit.
Yes. So so basically the profit motive basically causes the price to ultimately go down, because it's like, look at the deep sea drilling, because that is very risky, very costly.
Very costly. Yeah.
But once you tap it, because that's the cost, so your cost of recuperation, it has to happen at the beginning.
Yeah.
Because once you start hitting the market with that new oil, the price is going to go down.
Yeah.
So your cost of getting that asteroid gold, that's high cost. Your recuperation basically comes on the way back. But once it starts making its way back, you're going to push the gold basically to a floor.
Yeah.
Because now you actually have an infinite resource.
Yeah, that's interesting.
I mean, market forces are kind of interesting and get weird.
Yeah. It's you definitely bring a perspective that I didn't even think of on a couple things that I hear. Yeah, it's interesting. So yeah, I'm out of my drink.
Oh, well, yeah, so am I. I mean, that's the tail end, I guess.
That's the tail end.
But, so we wrap this thing up?
Yeah. Do you want to have an outro? What are we doing?
That's what I was asking.
Thanks for watching.
Yep. Thanks for watching. This was Off the Crypto Cuff. Have a good night.